I didn't.
That's loading up. You can see this screen on here.
Yeah, I see it. It's the Zoom plus YouTube screen.
Yeah. Yeah, you're gonna pull up the comments on yours, right?
Yeah, and I'm about to post it too.
Loading up. We live.
Yeah. Yo, what's up, man? Welcome to Stock Plug Investments YouTube channel, man. Hey, salute to everybody that's pulling up. Right now, we sending out the message, let everybody know we live. You see that title, man? Today we're gonna talk about how to invest your first $100. You know, a lot of people got that question, so we wanna give an answer. Let me see. Let me post this real quick.
Anybody new, subscribe to the channel. Trying to get to 50 subscribers.
You know? Send that out right now. All right. Bet. All right, let me get it pulled up. All right, you can go to the regular screen, bro.
Okay.
Yeah. Make sure that chat box working.
Oh, chat box. Oh, yeah.
I'm already got it pulled up.
Okay, all right. Yeah. Everything in there, you can see it.
Yeah, I see it, but it's still showing the channel page for some reason. All right, you go to the regular screen, bro. There you go.
Oh, chat box.
I'm already got it pulled up.
Okay,
all right, bad.
Everything in there, you can see it.
Yeah, I see it. All right, so as you can see, go in there.
Anybody got any questions? I can go ahead and ask us. We're answering questions right now before we get started.
Yeah, but as y'all can see the title, today we're gonna be talking about how to invest that first $100, man. Like that's important. And this layout we're gonna give y'all, this can be used with $100, $1,000, 10,000, 100,000. It's the same way, just different amounts. Yeah. As y'all can see the title, today we're gonna be talking about. Let me see. Give me 1 second. It's important, and this. Yeah. If we got any questions, go ahead, put them in the chat box. Let me see if we can even use the chat box. Oh yeah, we can. Yep, it's up. All right, man. Let's get to it, bro. Let's get to it.
We'll go ahead and start off. We're about to start off with some definitions for the day. I'll start off with ticker. Basically, ticker is, here go the real definition of ticker. It said a stock symbol is a unique series of letters assigned to a security for trading purposes. Stock listed on the New York Stock Exchange can have four or fewer letters. So basically, a ticker is basically the short for a stock. It's basically 3 to 4 letters telling you whatever stock it is. So basically, a ticker, for example, for Apple is and it's AP, or what is it? Apple APLE, or what is it?
APLL, I believe. Let me confirm that real quick.
I forgot the ticker for Apple.
All right.
It's AP something, but for another example, AT&T, the ticker for that is T, just T. So yeah, that's the example.
Apple is AAPL.
Yeah, AAPL. Yeah,
AAPL is Apple's ticker on the stock market. So yeah, if you're looking for this stock on Robinhood or whatever platform you is, or whatever platform you on, you can type in the actual name of the company, or you can
Yeah,
type in the
or
3 to 4 letter ticker and it'll pop up.
right.
Yeah.
Yeah, and a lot of other stocks got real good tickers on like basically you can remember them really good. For example, one of them is called Good and Gain. Those are monthly dividend companies. Another one is Weed, WEED,
YOLO.
MJ. Yeah. Like those companies actually do better in the S&P 500 than other companies. For a fun fact, if y'all didn't know that, yeah, companies with good sounding tickers, making people remember them, they actually do better. That's just a fun fact. Over time, they did better. But we can go ahead and move on.
Yep. Tell them about diversify. That's important.
Yeah. So basically, diversify. The real definition of diversify is make or become diverse or varied. I mean, so you can sum that up for them, bro.
Yeah.
Diversify.
Diversify just mean like don't put all your eggs in one basket. You know what I mean? Move it around. So if something happened to one stock, if one stock go down and another one go up, your portfolio really don't move. It balances out because one down and one up, So now you ain't really taking no hit. And that's how you protect yourself. That's how you make sure you don't lose all your money. You know what I mean?
Yeah,
Putting all
basically
your eggs
just
in one
spread it
basket.
out.
Yeah,
Spread it out to different companies. Yeah, just spread it out into different companies. So if one company go down, another company might go up. You can be nice and diversified when you invest.
Yeah, because putting all your eggs in one basket in the stock market, easy way to blow up your portfolio.
That's rule number one. That's rule number one. Never invest all your money into one stock.
I know a lot of people eating off that Dogecoin, man. Just make sure you put some money somewhere else, man.
Hey, speaking of Dogecoin, I think it was on the news or something I was watching. They said somebody made like $1 million off Doge. They invested like 100K or something like that, put all their money into Doge and made $1 million from it.
Yeah, you just got to know what you're doing. You could definitely make a nice amount of money. You just got to know what you're doing. Like,
yeah,
for sure. All right, what's the next definition we're gonna get into, bro?
We can move on to ETF. Definition of ETF, short for exchange traded fund. So you can sum that up for them. Exchange traded fund, ETF.
Okay, then that's just we spoke on this before. Like, it's just like when people
basically
take money.
It's the same thing as diversify, but
yeah, it's a way that they diversify. It's an easy way to diversify your money in the stock market is through an ETF. So instead of just buying Apple or buying Tesla, and when they fall, your money fall a lot because them stocks move a lot, you can actually get like an ETF, which is like a group of stocks that's in one sector. So it'd be a group of technology stocks like Apple and Tesla and Facebook. All of these is in a technology sector. So they group all of these together, and the ETF is just like a representation of how that whole group of stocks is doing. So it don't move up and down as much as the stock would, but it's a lot safer because it's spread out in between a bunch of different stocks. So that's the reason why we even going over this today, because this is part of the recommendation that where you're gonna put your money at. Because if you're a beginner, you need your money to be safe. So ETF is one of the safest things on the stock market for sure.
Get them an example of like one of the ETFs.
Okay, example, we're gonna go over some more. We're gonna try some today. But a good example of an ETF would be like QQQ. That's a technology ETF. And I'm gonna show you that one later. Like the ticker is QQQ. And that's a real good ETF. Like when I show you all the charts on this, y'all gonna be tripping. Like this is a real good ETF. And another one would be like one I'm invested in is YOLO. Like that got a good catchy name, so you don't really forget. That's actually a weed ETF. That's in the weed sector, so that ain't take off yet, but I feel like once they legalize marijuana.
In my opinion, I feel like YOLO didn't take off yet because basically most of their income is coming from Canada. And YOLO covers the whole North America, Canada, the US, and Mexico. So really, a lot of people in Canada don't really use cannabis all like that. So, but really, once the US go fully legal, like a lot of states is becoming legal for cannabis. So I feel like ETFs like YOLO would do really good in the next decade.
You hit that dead on the head, bro, because when Biden got in office, a
Yeah,
lot of the weed stocks just took off.
yeah,
And it was
yeah, yeah.
because they
It
knew
went from
that.
around under the $10 range to over the $20.
Yeah, they flew down. They flew up, bro. Like I remember YOLO was at like $19, right? Like the day before he got elected. The day after he was elected, YOLO flew to like $35, $40. Like, but and that was all because they knew Biden was supporting legalizing weed. So
Yeah,
they
ever since he
yeah,
got elected, it was New York, New Jersey.
Yep.
I think another one was like they made like the shrooms legal in Arizona, I believe.
They ain't playing.
Something like that. Yeah, it was like for
Everything.
medical use though. It was for medical use though, but
that's gonna be long term. Like these ETFs cheap right now, but
yeah,
10 years from now, I could see all of these weed ETFs being $100 or better.
100 plus, yeah. And right now they still in the $20 range. Like they ran up because of all of the bullish investors hoping to get into like get in early, be early investors into it. Yep. But they went back down to the $20 range. So
yeah,
I'll look into that ETF. That's a good one right there for the next decade.
For sure. We're gonna look at that a little later, see where it's at on the charts and whatnot. For sure. Tell them about the dividends, bro.
Yeah, dividend. Yep, dividend. Some people probably already know what a dividend is, but we still gonna go over it so everybody know what we're talking about. So basically, a dividend is a sum of money paid regularly, typically quarterly, by a company to its shareholders out of its profits. So I can sum that up. Basically, a dividend is the amount that a company would pay you for holding the share. So like basically if I held Apple for 3 months or over, I'll get paid dividend. And we talked about the dividend yield in the first video. If y'all didn't see that, go check that out. But basically the dividend yield is just a percentage of what the company will pay you throughout the year, throughout the 4 quarters. So they break that price down and divide that to the stock price, I believe, bro. And that's how much you would get paid every quarter. So yeah, that's basically what a dividend is. Some stocks pay monthly dividends, like you can get paid every month, but most stocks pay quarterly dividends.
Yeah, and even some of them pay one time a year, bro.
I got once a year. I got paid from what was it, Volvo? A $3 dividend for only holding 2 shares.
Yeah, we was talking about that play.
Yeah,
we was talking about getting in next year, right before the
get
right back out.
Bread,
but y'all gonna know about that later though. But
that's basically what a dividend is.
Yeah, and the reason why we even talked about these words today is because these words is it pertains to how we gonna invest this $100. So let me give you all the game on how to invest your first $100 in the stock market. Whether it be $100, $1,000, 10,000, 10,000, or 100,000. A good game plan for beginners off top, and the reason why I say it's a good game plan because it's not risky, is to invest 40% of that $100 into dividends, and that's dividends is income. That's gonna make you some money. So we talked about that last week. That's dividend or that's income investing if you get dividends. So 40% we're gonna do dividends. Another 40% we're gonna do ETFs. So them safe in themselves because we ain't just getting one stock and it ain't as volatile. It don't move as much as a regular stock do. So 40% in dividends, 40% in ETFs, and then we're gonna put that last 20% in growth stocks. So any stock we see got potential to grow in the next year to 5 years, year to 10 years for real. You know what I mean? So Nvidia's of the world, AMD, Apple still growing, Facebook still growing. They ain't got that much more room to grow, but they still growing for sure. So you want to put your money on that 20% on stocks like that because that's what's gonna make you some, the majority of your money. And the other 80% is where it's going to be safe and make you money over a long period of time. So we feel like that's a nice, safe strategy to invest your first $100, $1,000. Even if it's 1,000, you do the same thing. $400 in dividends, $400 in ETFs, and $200 in stock, or growth stocks.
Yeah, growth
Stocks that
stock.
got potential to really run up.
And to basically sum that up, to do that is to diversify, just spread it out into different strategies to grow your portfolio, and that's more safe than just using one strategy or putting all your money into one stock. You just diversify.
Yeah. And that's how you give yourself time to learn the stock market. Like, if a lot of people say they want to make money every day in the stock market, bro, that takes so much learning to do.
Yeah,
that's when it really get tricky. When you want to make money every day, you're gonna have to put in that time to learn this. Like,
yeah, and time is money. If you don't have that time, then it's not gonna work for you. Like, I know people like go to work 9 to 5 and have to do other stuff. Like, you really need time for the market.
Yeah, if you ain't got time to watch it, then you need to stick to like some long-term plays, dividend plays, ETF plays, and growth stocks. Because then you ain't got to watch your stocks every day. You could just glance at it every few days, or even if you look at it every day, you ain't got to watch it all day. You can just peep where it's at the beginning of the day, check at the end of the day. That's a good game plan, especially if you work. For sure. So that's how you invest your first $100 or however much you got in the stock market. You split it up into portions, 40, 40, 20.
And diversify.
Diversify.
That's the key when you're investing, man. Just diversify.
Yeah. You don't ever want to be 100% on nothing for real, man. Gonna blow your account up. Too many people do it, bro. It's crazy. It's crazy. So now I want to get into some charts and show y'all like what we seeing on some of these stocks, and show y'all exactly what we seeing, so y'all can. Let's do that, and then pull up.
I made you the host.
I'm already on it, bro.
Pull up the charts. There we go.
We don't got the charts. Yeah. All right, so you can see the charts, bro.
Yep.
All right, bet. All right, so the first one we was talking about was dividend, or that one, the first one, but first we're gonna get into a dividend stock, and AT&T is a real good dividend stock. They pay a nice dividend quarterly, and I'm about to show y'all how we chart it to see if it's a good buy or not. A for sure way to do it is you can look at the fundamentals, and that's like the balance sheets and all that stuff. To look at the income statements and see what their numbers looking like. That's the fundamentals. But then right here, what this is called the technical. So when you're doing charts and stuff, this is called the technicals, and you can figure out if it's a good buy by doing it this way too. So I'm gonna run through this real quick because this is gonna be our bread and butter. Y'all gonna see me chart every day, almost from like start next week. We're gonna do charts every day because this is how you really find out if it's a good buy or not. So
you want to just show them some indicators?
No, we're gonna get into that next week when we do like charting week. Next week gonna be charting week, so we're gonna bust down the charting real good next week. This is just a quick blow by. Show them, since we talking about dividends and ETFs, we're gonna look at some of those and see if they're worth buying right now.
Cool.
All right, so this is gonna be real quick, y'all. Don't worry about it. I'm gonna show y'all how to do this for sure. But basically,
some people get confused when they see this screen, man.
I know, right? Let me preach it. Let me tell them. So, this is the stock in the monthly time frame. Every candle you see is a month. So this how it moves since like IPO'd in 83. Wow, this stock been around since 83.
to like change it, if anybody used this or want to use TradingView, it's up at the top, right above the chart, the month, the week, 5-day, 2-day, all that
Oh
stuff.
yeah, that's this right here. He talking about these are different time frames.
Yeah.
Different time frames. And the website we want to do this is tradingview.com.
Yep.
And it's free and everything. So all I did right here, I'm creating a channel. So I want to find the low points on the chart. We found the low point right here, right here, right here. And we want to draw a line to touch all these low points. It's the bottom of the channel right here. Then we do the same thing at the top. You typically want to go to the highest point on the chart and then make it connect at least 2 or 3 other candles. So boom, that's how it look. You know, but let me do one more. I don't usually do it like this. Let me show you something. Usually you can do it like this too, to like get a channel to see like how it move in the channel. This would be, I'll put it like right up here. This is like the channel it's in. The reason why we call it a channel is because stock tend to stay inside the channel. Now they break out, you know what I mean? If it's just a lot of people buying it, it's gonna break out. But then it start using it as support and resistance. So look right here. Boom, it come up to the line, stop right there at the line. Then it break past it, come down. Now it's line. It come back to the line, bounce on the line. Now it finally bounced off. And now when it's coming back down, it's gonna come exactly to that line again. You see? And then they want to get back inside the channel. It go back to the channel, go all the way to the bottom of the channel, and then start making its way back up. Now, keep in mind, these is month candles. So, you know, from the bottom of the channel, this was 2002. It took all the way till 2007 for it to get to the top of the channel. But that's like a 2002 was at like $20, and then this is 42. You doubled your money in 5 years, and you're getting paid dividends.
Yeah, this a dividend.
You know what I mean? You put $1,000 in this, you didn't made another $1,000 because it didn't doubled up. Plus, you got paid dividends the whole time.
And if you was watching the chart, you know where the stock is about to go. You also can bet on stocks going down. We're gonna get into that in another.
Yeah, that's later. But yeah, you see, stocks like to respect the channel, though. You know what I mean? So if you buy it down here at the bottom, you can say, like, well, I see, you know what I mean? It got some more, it got a ways to go up. You know what I mean? But that's just the channel. I'll actually draw one more line because you really want it at the top, the highest point on the chart. So I'll draw one like this. You know what I mean? Boom. That's an accurate one. I can get rid of this. I just wanted to show y'all how the channel look. But this is a wedge. This is a wedge formation. Now it's going to break out. It either can break out and go down, or it can break out and go up. But once it get to this end, it's going either way. AT&T just increased their dividend. They doing good on they revenue good. They finally did a good quarter. They finally had a good beat this year. Like AT&T turning around. Like even Kramer suggested AT&T. So I could see this stock coming back to the top like $30, $35 and breaking out. We out of here. You know what I mean? So that's a good dividend play right there. This stock you can get in, hold it for 5 years or any stock like it, and just collect your bread while it's moving up slowly. Like it definitely moves slow. You see, it really took like 5 years for it to do this. Like that's slow, but your money's safe. You know what I mean? Because dividends don't move fast. They ain't real volatile. Now I got I don't have another dividend. Well, these ETF dividends. Now I want to show y'all some ETFs. I know y'all heard me speak on QQQ. Let me show y'all something real quick with QQQ. I already started charting this, and I'll explain this. So this on the monthly too. This is on the monthly, and I did the same thing. I drew the channel, found the bottom. You know what I mean? Drew a line that the stock was respected. And this the channel right here, these 2 yellow lines. But if you peep, the stock came out in 99 and it was like $50. So it ran to the top of the channel for like 120, then came all the way back down, right? About 2002, it was all the way back down. And that was really due to the dot com boom, like the market crashed crazy.
Yeah.
And this is, it's a tech ETF. So anything dealing with tech, if the tech down, this down. That's just how it's gonna be. But you see how I was riding this channel for the longest, like
a resistance.
Yeah, just slowly respecting the channel, just making his way up. You know what I mean? Got to the middle and just broke out. Like it did, it just started doing numbers right here. So this right here, these blue lines was me just drawing another channel, but for the breakout, like it went, I think I drew this on the daytime frame, so we don't really need these. But now that you see this blown out the channel, like you can kind of expect this to come back down. We don't know why. We don't gotta know why. But no stock keep running forever. It no matter what it is, bro. It just don't. It gotta cool off, and all stocks return to their channel. All stocks. Bitcoin return to the channel.
All right.
I'll pull Bitcoin up in the future, but everything returned to the channel, bro. So that's why I say this technical analysis is the bread and butter, because if you can see where it's at and where it's going, you can feel comfortable with getting a long-term hold on something and just sitting back and chilling. You don't buy it all the way up here, though.
Yeah, I was about to say right now, the RSI.
You don't buy it all the way up here, though.
The RSI
This gonna get
right
your
now.
mouth toe out. This gonna get your mouth toe out right here, bro. You buy this and it come back down here to 100, you sick, bro. You gonna be sick. So this chart alone tell you that it's probably gonna be some tech issues and either a market crash or something gonna bring this stock back to reality. Like it's just too overbought.
That's because a lot of technology stocks right now is overbought.
Yeah.
And basically this ETF own a lot of technology stock. That's basically the sector is technology for this.
They got Apple, Facebook, Nvidia, AMD. Like majority of these stocks is in this one ETF. So if they doing good, the ETF.
A lot of people didn't know Facebook own a lot of companies. Like they own Oculus, the like virtual reality headset. Them cost like $400 or something like that. They own Instagram. If people didn't know that, Apple actually own Instagram. I mean, Facebook actually own Instagram.
Facts.
People didn't know that,
but look, I want y'all to see this. Look at this move though, man. So in 2002, if you would have bought this at like $20, like $20 literally in 02, bro, where it was at the bottom and held it for what? 18 years? 18 years? Right. Your stock go from $20.
You really could have did that in 10 years. You really could have did that in 10 years. Really, if you would have bought it around like 2012.
Yeah.
On that range.
2012, it was at this 22. You're right. This 2012 right here. And it was, I was at $58.
Around 50,
yeah, $58, but it was still at the bottom of the channel. It ain't even take off yet. And it was slowly moving up. This the bread and butter right here, man. When you catch a stock at the bottom of the channel, it's love, man. It might take time, and that's why we do ETFs, because it's safe. This is safe you're gonna get. You know what I mean? It's diversified. So even when it do crash, it's good. If you ever notice, a lot of stocks fell so hard last year in March. A lot of stocks. This barely budged. Like, look at this. This February, the 52, the high on February was 237. That's right up here, y'all. 237. So I'll hover over the candle, and then right there say H. 237 was the high. Then the next month, when the market crashed last month or corrected itself, it only fell about 30%. It went down to only lowest. Ooh, that's low. It went down to 164. 237 to 164. That's a big correction. But then immediately the next month it took off.
That next day, actually. Or that next week.
This the month time frame. This month.
Oh, okay.
It's a month.
Okay, yeah.
All of these is months. So
month.
But look at them running though in like
every single month.
It's just ran, bro. Like see it's at the top, like now it's stalling out. It's ready to, it's exhausted. It can't keep running. No stock can. So now it's getting tired and it's gonna start pulling back and heading back to the bottom of the channel. That's an ETF. That's a technology ETF right there. Now, what was reality income?
Reality income, yeah.
Yeah, this a good one right here. This is another good one too.
Want me to let them know what that is?
Yeah. Go ahead, tell them what this is exactly.
I actually own a lot of reality income. I'm real bullish on that because reality income own a lot of stores that we shop at, like Family Dollar, Walmart. They own Targets, Wendy's, McDonald's. They own a lot of that real estate, and it's a monthly dividend stock. I think they pay around like 45 cents or something like that every month for every share that you hold. So like it's literally like an income, literally with reality income. Like it's in the name, like really.
It's definitely an income.
And yeah, it's real steady income. They make a lot of good money, good profits every quarter. So I'm real bullish on reality income, and that's basically what it is. It's just a real estate company that invests into a lot of companies that we shop at, like Wendy's, McDonald's. It's in the food industry, retail industry. That's basically what reality income is. And right now, it should be going back up.
Yeah, it's on its way back to the top of the channel. It's on its way back to the top of the channel. Let me show y'all what it looked like in March. You see this fall in March last year?
Yeah.
From the top all the way to the bottom in 1 month.
I had bought around the election.
Yeah, this is stock. This ain't no ETF. So that's why it fell so heavy like that. Like it literally went from like, what's this? $80-something to
it's kind of like an ETF.
$38.
It's kind of like an ETF, but another reason that it went down is because of the retail industry. Like I was saying, like they own a lot of different like retail stores as well. And at the beginning of the pandemic, they all had to shut down. So
all of that
that's another reason why it dropped down.
Yeah. So this halfway up the channel. So if somebody wanted to get it, you could see like how much more room it got. You would do it like this, like it'd probably itch its way up. So
make sure y'all do your own research, man.
Yeah, do your own research.
Own chart. It's trade and view. It's free. You know what I'm saying? It's nice and simple. It's not complicated.
If you know me, you can call me and I'll go over this with you any day. Like I do this. I talk this stock stuff every day. This is my livelihood. This is my profession. So yeah, if you know me, you got my number, you can hit me up. We can always go over some charts. We hop on Zoom, do it like we're doing it now. But last class we talked about
climate change.
Yep, socially responsible investing. Yeah. This right here is a socially responsible ETF. This is Trust Global Clean Energy ETF. So they focus on, they got all the companies that's in their portfolio is companies that relate to green energy or clean energy. I mean,
basically climate change. Yep.
Yeah, Charge Point, ETF. I mean, not ETFs. EV stocks, charging companies like anything that's gonna help our atmosphere, our environment in the future. If it's a company, they probably got it in this portfolio. And as we can see, it started out 08, and it took a fall, and it looked like it's at the bottom of the channel, y'all. Yeah. Like I told y'all last episode, like they gotta invest trillions of dollars into this. Yeah. I'm buying this ETF. I'll probably buy today. I don't even care. I'll probably buy today. Like
I bought in on it earlier.
If you gotta get in, man. Like you gotta get in, man. So look, we found the bottom again. Boom, it's the bottom. It's respecting this line right here. That's the bottom of the channel. Boom. Then we find the highest point right here. Boom. You want to connect it to at least 2 or more dots or 2 more candles. Boom. This is the monthly channel right here. Now we can expect it to go down, come back down to like $10. That's why I'm probably clean up. I'll probably get a little bit now, just a little bit. A couple share right now. But when they get down here, I'm loading the boat. Let me catch it at $12.
Yeah.
I'm gonna throw a bag at it.
Remember this is ETF. It might take some time because it's an ETF. They own a lot of different. It's diverse, nice and diverse.
So just
Like solar panels, wind turbines.
yep.
They into the like the hydro like turbines and stuff to make
Yeah.
electricity. Yeah, like car charging companies to
Yep.
charge up the Teslas and stuff like that. So yeah, it might take some time to get back down to the resistance, but yeah, that's basically how you chart it.
But you can look at the personality of a stock and see how long it take it to go from the top to the bottom.
Right.
But
Yeah.
this ain't got that much history doing it, so I went
Right.
and do it on this. But
Yeah.
we can look at this right here in March when it fell. It started running in April. It went from April to January. So that's about what, 8 months to go to the top of the channel. You know what I mean? 8 months. It went from $10 all the way to $33.
Yeah.
You 3x your bread.
And I
3x your
believe this
bread.
ETF pay a dividend as well.
Yeah, and they pay dividends too. You know what I mean?
Yeah.
Like, this definitely a good play to start off and learn about the market and take your time, put your money where you know it. You ain't got to worry about losing all of it. You might lose a little bit, but as long as you don't cash it out, you don't lose nothing.
All right.
This is a
keep
safe way to
getting
invest
paid
your
the
bread.
dividends, and you reinvest. Every time you get paid a dividend, you reinvest, so that next time you can get paid even more.
Yeah. And I don't know, a lot of people probably heard about ARK investment. I just wanted to touch on this because this a lot of people know about Kathy Woods and her investment fund and all the different stuff she invests in. ARK Investment is one of her ETFs, and it's an innovation. So this is a good way to invest in like growth investment. Okay, so a lot of stuff that's in this ETF is companies that's going to grow in the next 5 to 10 years. NVIDIA, AMD, it's probably, I don't know if ChargePoint in there, but it's probably in there. One of them, ChargePoint or Plug Power. Anything that you can see being big in 10 years. 5G plays, a couple 5G stocks is in this ETF. Tesla for sure is in here. She big on Tesla, bro.
Yeah, that's probably the biggest holdings in here. Real
on Tesla.
So if y'all want to get some exposure with that, this is a good ETF.
For sure.
Exposure with Tesla, just like Brad said, a lot of different companies for ARK investments. Yeah. And how much is it? The 120
right now, it's 121. 121.
Yeah, so
I'm gonna hold off, and I'm probably gonna get in right here at this resistance line right here at $91. Yeah, $91. I'm gonna throw a little bag at it. And then when it comes to the bottom of the channel, that's when I'm gonna scoop up all. Give me all that.
Like 70, yeah.
Yeah, give me all that, and I'm riding it all the way to the top. I honestly, me personally, I think it's gonna be a crash this year. So I don't think we're really gonna have to wait long for it. I really don't think so at all. So, I could see in the next few months me coming back and showing y'all like, look, it came back down here. Now it's time to buy it. Let's ride it out for the next few years and eat. But this was just like a little quick synopsis on charting. We're gonna definitely get into this a lot more next week. We're gonna tell you like a lot of the indicators, like stuff down here. Y'all ain't gotta worry about this now. We're gonna talk about it next week. But this is what really mattered. You buy your stocks at the bottom and you sell them at the top. Period. That's
if they dividends, I recommend you don't sell. I'm a long-term dividend investor. Like if you want to make that income every month, every 3 months, then don't sell.
Right.
That's Warren Buffett number one rule: don't lose. So if you lose in the stock, definitely don't sell it. Like so.
Yeah. And then you can also like hedge your bet by like getting the put on it,
Right. Yeah. We gotta talk about that.
Yeah, that's too bad. We're not going into options yet, bro. Stay away from it, bro. That's you, bro. You tripping. But yeah, this ain't ready yet. We ain't touching this yet until it get back down here, man. We need to see some more history on this and make sure it's ready to run up. It ain't ready right now.
Ticker for that, ARKK.
Yep, ARKK. Ticker for Reality Income is O. Ticker QQQ Investment Trust or Tech Investment Trust. What's that? ICLN. That
Yeah,
is the socially conscious ETF, I guess you call it.
iShares, basically
Yeah.
climate change, ETF.
Socially responsible ETF.
Yeah.
And then we got
That's a dividend
AT&T.
right there.
Yeah, AT&T is a dividend play too.
And another thing, AT&T is actually a dividend aristocrat. They've been paying dividends every 3 months for the past 25 years plus.
Big dogs in the
Like,
game.
yeah.
We're gonna go over that too. Man. You know what? We probably need to touch on that on Sunday, the different categories for dividends.
Oh, yeah.
Dividend king, aristocrat.
Right, yeah. Like
Um,
more safe dividends.
yeah.
Yeah. We can get into that. Let them know some good safe dividends.
For sure. But let's see if we got any questions before we close out.
Go ahead, pull it up.
Screen share. Let me go ahead and pull up the tubes here. If y'all got any questions, y'all can send them in the chat. Let us know what's up. If you like the video, go ahead, hit that like button one time. You know, get your friends, go ahead, subscribe. Oh yeah, okay. I see you, Will. You gotta be patient. You right, cuz.
Yeah,
You gotta
definitely.
be patient with a PAY.
Definitely, yeah.
Big facts. You definitely gotta be patient, man, because these type of moves we looking for take time, and the most patient person in the market win. That's the name of the game. Most patient person in the market win. So we're gonna take our time. We're gonna find some good ETFs and dividends. You know, probably throw a few out there for y'all or something. But we appreciate everybody that tapped in. Love.
I got the quote of the day. We can end it off with the quote of the day.
Go ahead, hit them with it, bro.
I say to lose patience is to lose the battle. So if you ain't got patience in this market, man, you're gonna lose, man. You gotta have patience. Like, you're not just gonna become rich in one day or 1 week or 1 year. It's gonna take some time, man. You gotta build generational wealth. Patience is key.
And then in the meantime, you can do this while you learning how to make it fast. You know what I mean? This how you get in the game without getting your head knocked off. You can take some L's, but they ain't big.
Yep.
And
that's
then
how you diversify right there.
Yeah, learn the game, and then when you're really ready, you can put that time in and start making money every day. You know, I put that time, and that's what I do. This is what it is.
Yeah.
Man, love everybody that tapped in, man. I appreciate y'all for sure.
We out, man.
Yep. You close the live, bro.
For another example, AT&T, the ticker for that is T.
What's up, Tish? Yeah, I don't see nothing in the chat. Why not? Oh, for the ETFs? Bro, I gotta close this live. This live still going. Is it still going on your screen? Or you close out? Yeah, you gotta shut this live. You know what I'm saying? All right, let me tell you about close this out, man. I'm gonna call you back, sis. Alright. How I gotta end it if I'm not the host, bruh? I ain't started.